I used one daily candle that has helped me make my trading incredibly simple. And after 6 years of trading, it took me almost 2 of those years to actually become profitable. But following this daily candle strategy, now I only trade less than 90 minutes every single day using a simple 3-step system. And this strategy probably already involves concepts that you're familiar with: fair value gaps, liquidity, and time. But much like you guys, I struggled for years before I became profitable. And the reason why you are probably struggling to get that profitability yourself is because you don't know how to structure it properly. And that's one of the main reasons this daily candle strategy helped make me profitable, because it's simple and it has 3 steps to it. And using this same exact strategy this week, I was able to get a $16,000 withdrawal from my live account. Now, I'm not guaranteeing you results like this, but if you use this strategy, whether it be on prop firms or even scaling your live account, you're also going to be able to make consistent profit using this strategy. But it takes a lot of time to get to a point where you can make money like this, and not everybody has that kind of psychology. So start small, focus on where you're at in your journey, whether that be a 50K prop firm account or even a 200K prop firm account. You have to learn to master the strategy and apply it to where you're currently at in your trading journey. Now, as I mentioned, this strategy has 3 simple steps, and that is finding the daily narrative, scaling down to the lower time frames, and then finding market structure on the lower time frames to actually get your confirmation. So both market structure and confirmation go hand in hand, and I'm going to show you exactly what kind of confirmation I personally use to determine the market structure and the daily narrative, because that's one of the most important things. And as I said, it took me over 2 years to become profitable, and I feel like one of the biggest reasons for that is because I was stuck on the lower time frames. The moment that I started scaling out and using this daily candle strategy, that's when I actually began to read market structure properly and actually be able to identify where the market was going lower time frame. Because we don't need to know where it's going in the span of 2-3 weeks. We need to know where it's going in the span of the next 30 minutes or the span of the next few hours. And that's where real money is made. That 16,000 withdrawal that I had was made in like less than 3 hours. If you want to see more on the exact trades I took to make that 16,000 profit, I documented the entire thing in my Telegram, which I'll link in the bio, and I also uploaded a trade recap on my other YouTube channel, which is titled Full Send Traders. So be sure to search that up, and it'll be the most recent video there. And without further ado, let's hop straight into the video and let me break down how you can determine the daily narrative. So here's the daily time frame on my chart, and here on the daily time frame I have a gap. However, in the same exact day inside of my Telegram, I sent out that I was potentially looking for sell side. So let me show you guys exactly what I was looking for. Here I posted a picture of this exact range yesterday. So before it actually formed a bullish candle or a bearish candle. We did close and respect this gap, so it's a bullish sign. We can very well also be looking for buys. But I said if price wants to go down, this is what I'll aim for. So you can see here that I'm presenting both sides. I'm saying, yes, this is a bullish gap, we can go up. But if price wants to go down, then this is what I'll use to go down. And that's exactly what daily narrative is. You don't just come in with a married bias and say, oh, it's going to go up no matter what, I'm going to buy. No, just because there's a bullish confluence doesn't mean the price is going to go up. And so there's always going to be 2 sides. If it wants to go down, there's going to be a premium that price taps into before melting. And if it wants to go up, there's going to be a discount that price wants to come into before going higher. So let's hop back into the charts and see this here. So what was I looking for a bearish target? I said right here we have a previous daily candle, and this would be a daily rebalance if price came up into it. It's the same concept that I used for that 16K trade. Let me show you guys again. Scroll up a little bit higher. So this line up here is the rebalance that I was looking for. There you go. So 4 hour, new 4 hour rebalance, and from there it actually ran down. So let me show you. Boom. This is actually the 15-minute time frame. I don't think I sent another 4-hour time frame update, but regardless, I was looking for that rebalance to push price lower, and that's the same thing that would have happened here if price wanted to go lower. And so lower time frame in yesterday's range, I'm coming into the daily time frame, and notice how I just scaled down. It's muscle memory at this point for me to scale down, because I know that once I find a daily time frame narrative, I'm not just going to stay on the daily time frame. I'm going to scale down and look for that lower time frame confirmation. So the first step is going to be identifying the daily time frame narrative. And so there's going to be always 2 sides of the narrative. First of all, this is a bullish gap on the daily time frame that price can go up from. And this right here is a immediate rebalance if it goes up there. That would push price down if it wants to go lower. So there's 2 sides right there. And so you then go inside of the lower time frames and wait for the session to open. So here we have Asia session. And what I said in the Telegram is like, look, we pretty much barely missed this daily rebalance from the open 2 times. 2 times from the open, we barely missed it. I said 100% it's going to go there. Let's see what I said here. So after I said that potentially we might get a lower correction, later I sent out a screenshot and I was like, oh, I don't think I ever sent it, which is a little unfortunate for everybody in this Telegram group. But I marked out on my chart buy side liquidity. Essentially, because it barely missed it 2 times and then melted, I was like 100% we're going to get there. And so I said, caught the long, because I literally took the buy to that level, which was exit price 3982. Look at exactly where this level is, 3982, because I knew that it was going to run there using the daily narrative. If it wanted to go down, it would still come up into that level. If it wants to go up, it's going to run through that level. So either way, that was a win-win position for me to go long, targeting this high. And so that's exactly what happened there. We ran up, and then I said I caught the long. Now I'm waiting for sell side. So I didn't sell just because it tapped into the daily rebalance. Remember, this right here is a daily rebalance. And you can see on the lower time frame, as soon as it came into that, it instantly turned around and melted. So that definitely would have faked a lot of people out. But the thing with this specific strategy is that it involves liquidity. And there are those 3 simple steps. The first simple step is daily narrative, right? We have the daily narrative. You find the daily narrative, which I just showed you guys. We had this for the bearish daily narrative. And then we had the entire gap for the daily bullish narrative. But this doesn't mean just because we run up a little higher that we're obviously going to go up higher from this gap. No, you look for confirmation. If you want sells, then you wait for price action to give you sells. And that's where this liquidity strategy comes in. You don't just get in off of the liquidity, but you use the lower time frames for confirmation. And that's why I said the last thing is market structure. Because after daily narrative and using that liquidity, we then look for market structure. And market structure means that if we want to run down, we're going to expect one of these gaps to get disrespected and price close below the gap. And so once it actually started running back down and I got confirmation using these gaps, boom, tapped back into one of the gaps right here, tapped back into a bearish gap, and also respected this one right here, price started running down from the rebalance. The same exact zone that I was going to use for my sell side, 3982. Boom. I hopped in my position right there. Look at where I'm in right here. 3982.5. Do you guys think that I'm just randomly entering positions? Like, genuinely. I've been posting my trades every single time for the last, I don't know, like 4 years since I've been doing social media. I've been posting every single one of my positions inside of my Telegram, on my Instagram page. I've been doing trade recap videos. If you guys study my content, you will see that price actually respects this stuff, and I'm only trading gold. I'm not telling you that these concepts work on everything. They do, but I'm not telling you this. You can go in gold and study exactly what kind of trades I took, and you'll see that these concepts are respected on gold. That's what I want you guys to know, because I only trade gold. You don't need to trade anything else. I can trade Asia, London, New York session, all 3 sessions. And low-key, I'm a little bit of an addict. I be trading all the sessions sometimes, just because I have a lot of people that are from different time zones. Personally, I'll just trade all the sessions. And it's because of my style of trading that I can do that. Because, like, for example, I'm trading the daily range, right? So if I'm trading the daily range, it can run to all of the targets inside of the daily range. So I'm pretty much going to trade the daily candle until it gets to the target, whether that be in London session, Asia, or New York. Whenever it gives me my confirmation, I'll enter. If it gives me confirmation in London, then I'm trading London that day. So back to the strategy. What did we get here? We got confirmation. We finally closed below this gap right here. And then we pulled up into that daily narrative level that we had for sell side. Now, overall, you still know that the daily candle was bullish, right? However, what did we do? We melted from this area. We got an insane melt from this area. Boom. I do believe somewhere. Oh, I think I actually entered right here. So not in this first move, but in the second move, because I said my position survived. So here, 3965. It ran all the way to 3965, and I was up just about 4,000. I was at youth that day, so I didn't actually end up closing the position. But you guys can see, the strategy that I use, first of all, comes from the daily time frame. Then you scale down to the lower time frame, and that's when you look for confirmation. Here, I got confirmation using this IFVG. Here it came back up and once again closed below the IFEG. That's how I know to get into a trade. Right here, it closed below the IFEG on the 5-minute time frame. I'm seeing market structure close again below this level and respect it. So just like right here, we got that confirmation. We also got the same kind of confirmation right here, where we close below the gap, pull back up into it, and then run from that exact level on the daily time frame. So you're looking for a higher time frame narrative. You're scaling down using liquidity. Like here, we took out liquidity, previous high. We run down, create that market structure shift, and that's when you hop in for your trade. And this is the same exact model that I use on every single trade that I take. You find the daily narrative, you scale down to the lower time frame, and you look for the lower time frame to actually give you a confirmation. And my model is very simple. It works like this. You have a previous high after the daily narrative. So let's say the daily level that we're trading is somewhere right here. So you have a previous high, and essentially once this high is taken out into this daily level, you don't just start looking for shorts, because just like yesterday's price example, I'm not showing you some random example that I chose from the market. I'm showing you yesterday's price action. Go into the charts and look at it. I'm not telling you to sell right here. Same with the sell that we took. I told people, my advice to you guys after I took a 16K win, I said my advice to you guys is don't buy. Don't buy. And we only targeted 3,990, right? It ran to 3,960 that day. I could have had an additional $20,000. But don't look for buys. Why did I not buy even though that was a bullish gap? Because the market can continue running in the same direction that it's running when it builds up volatility, when it builds up momentum. So you do not want to catch the rocket until it hits space and starts floating back down. You know what I mean? Or like when the knife is falling, you don't catch the knife while it's falling. You wait for it to hit the ground. You pick it back up from the ground safely. And that's exactly what we're doing here. And so my model involves this liquidity sweep and then market structure shift when we start running down. And for my personal strategy that I teach and I trade gaps. If you want to learn how to read market structure using gaps, then go join my Telegram and watch the trades that I send out. So I look for that market structure shift after a liquidity sweep. 3 simple steps: daily narrative, liquidity, market structure shift. Then you hop in off the market structure shift and you let the lower time frames tell you where it's going to go after the higher time frame hit. So if the higher time frame hits, it goes up. It never gives you that market structure shift. It keeps respecting the bullish confluences. Then you're not going to get an entry. You're not going to take any losses that day. You're seriously not going to, because the market, especially gold, is not going to give you a market structure shift towards sell side if it's not bearish. It's going to continue respecting them visibly with the gaps, and it'll continue going higher. You won't get a trade. You won't take losses. And so I genuinely want you guys to understand that trading doesn't have to be as complicated as everyone makes it out to seem. It took me years to realize that all I had to do was just to remove all these random concepts and stuff that I was using. I was using Fibonacci extensions. I was using trend lines in every trade. I was looking at all the support zones just to see, oh, I took a loss, but maybe it respected this other strategy that I'm not trading. All that stuff kept blinding me. It kept making me jump strategy to strategy. When I realized 2 years in that all I really had to do was stick to this daily narrative and let the lower time frame actually tell me, I would keep coming in with a married bias, and I'd say it's gonna go down, or it's gonna go up, and that caused me to lose the most. The moment I started letting price tell me where it was going, that's when I started making money. If you guys enjoyed this video and you want to get a more in-depth tutorial on how to implement this model, drop a comment asking for it, because I'm not going to be making these videos if you guys don't want to see them. Thank you all for getting through this video, and if you want to see more videos just like this, I upload 2 times per week on this channel. If you want to get my trades for completely free, you join the Telegram, which is also linked in the bio, and if you want to use the same broker that I use for my live account, I'll also link it in the description below. Thank you all for watching this video, and I'll see you guys in the next one.